Unity released their latest quarterly figures. We've got some good news, we've got some bad news. The good news is double beat for the quarter. Bad news, guidance has been lowered yet again. But another good news is that finally we're going to get a new CFO. Yes, finally, a refresh for the company. Because remember, Unity is operating in a duopoly. So to screw it over, you really have to be a real professional to screw that one over. Of course, this is sarcastic because, look at what happened year to date. It's down 64%. In the last 3 years, it's down 86.5%. Overall, you're still down. From the time it went public, you would have bought, you would have been down now close to 80%. It's a company operating in a duopoly. You should not be down like this. It's incredible. It has a market cap of just $5.6 billion. Come on. It's crazy how mismanaged this company actually was. Hopefully, now is the turning point. We're going to go over the report. Currently, the expectations for this year is, of course, sales to be down 16%, EPS to be down 24%, and then a reacceleration from the bottom line, 28 and 15% in the next 2 fiscal years. Sales growth, 8 to 11% in the next 2 fiscal years as well. Free cash flow for this quarter was actually $18 million, by the way. Now, just for the sake of this video, I just want to show you the average analyst price target. Still sits 69, 70% higher than the price we're at today. To be honest, some analysts just didn't really look quite deep into this company. It's, again, a duopoly, but it was so mismanaged that it wasn't worth buying, even if it's Unity against Unreal. And so before continuing, if you enjoy this type of videos, leave it a thumbs up, subscribe if you have not, we really appreciate that. We're definitely going to have a look at SoundHound and at Rocket Lab as well, so stay tuned for that. If you want to support me even further, do check out the link down in the description and in the pinned comment with the top 10 best stocks to buy now, or go to fool.com/couchinvestor. Thank you very much. So let's start with the shareholders letter. So of course, this is the first quarter that the new CEO is writing a letter. He started at the company in May. He says here, the focus now is on fostering a culture of execution, discipline, and accountability. We plan to accelerate the pace of product innovation, strengthen the bond we have with our customers and community, and add world-class talent to the team. We understand what needs to be improved, and we are making the necessary changes in our leadership, products, and processes with a sense of real urgency. I think the new CEO knows very, very well how much they screwed it up. Unity is built on 20 years of deep customer relationships and a love for solving hard problems, providing vital tools and technology to a mobile gaming market that is 22% larger than it was in 2019. Mobile gaming represents 60% of the roughly $130 billion of consumer app spending annually, and 70% of the top mobile games in the world are built on Unity. In 2023, there were an average of 3.7 billion downloads of applications made with Unity per month. So again, Unity, if it's managed well, it will probably be worth more than what it is today. Then they announced here the departure of the CFO. We thank Louis for all of his contribution and wish him well as he pursues a new opportunity. We appointed Mark Barry-Smith, our current Chief Accounting Officer, as interim CFO. A formal search for a new permanent CFO has already commenced. So that's great. Let's see who the new CFO will be. Unity 6 is still on track to launch this fall. It's designed to be the most stable and high-performing version of Unity we've ever shipped. And we expect it to be the foundation of the next phase of our growth. This is going to be, I think, a milestone for the company. They continue by saying here, our rededication to delivering for our customers is particularly evident in our advertising business. Mobile advertising is approximately $150 billion opportunity, and it's a market that won't be won or lost over short distances. So again, this is an opportunity for Unity, only a company worth $5-something billion. And so for the quarter, they are pleased that second quarter results exceeded guidance for both revenue and adjusted EBITDA. Revenue from their strategic portfolio was $426 million, down 6% year over year. Guidance was between $420 and $425 million. GAAP net loss for the quarter was $126 million as compared to a net loss of $193 million same quarter last year, and a net loss of $291 million in the first quarter of this year. Adjusted EBITDA for the total company for the quarter was $113 million compared to an adjusted EBITDA for the total company of $88 million in the same quarter last year. Guidance for the quarter was between $75 and $80 million. As for the Create Solutions, revenue from there was $129 million, that's up 4% year over year, down 2% quarter over quarter. As for Growth Solutions, revenue from their strategic portfolio in the second quarter, that was $296 million, that's down 9% year over year, but up 1% quarter over quarter. Revenue for the total company was $449 million, down 16% year over year, driven primarily by their portfolio changes. And so, as for guidance for the third quarter, they are guiding revenue for their strategic portfolio to between $415 and $420 million, down between 4 to 6% year over year. They are guiding for adjusted EBITDA to be between $75 to $80 million. For the full year, they're adjusting their guidance. New revenue guidance will be between $1.68 to $1.69 billion, compared to $1.76 to $1.8 billion. This represents a decrease of between 2 to 3% year over year. The reduction in guidance represents a more cautious approach to the recovery of the Growth Solution business, where investments in fundamental product enhancements will take some time to manifest in sustainable increased performance. In Create, we expect revenue growth in the second half to come primarily from game subscriptions and continued growth in industries. Their new adjusted EBITDA guidance is between $340 and $350 million, compared to $400 to $425 million. And this, of course, is due to lower projected revenues, partially offset via incremental cost savings. They believe that there are greater efficiencies to be gained over time through a more disciplined execution. No kidding. And they end by saying that the net year-over-year dilution will be 2%. We can also see that stock-based compensation expense is down quarter over quarter and down year over year, so that's great. Adjusted EBITDA margin has improved quarter over quarter as well. Year over year, it's up 1 percentage point. And as I said from the start, free cash flow for the quarter was close to $80 million. That's up from $33.5 million same quarter last year. Now, last thing here, this is just a by the way for future reference, goodwill. Goodwill as of now is still $3.1 billion. And so right now, if we look at the graph, well, there is really nothing much to add here. It's at all-time lows, of course. $14.35. RSI on the weekly is oversold, but as you've seen before, we were oversold in June, closer to $19 or so, and the stock still went further down. But with the new CEO, future new CFO, some changes for the company, maybe not at all-time lows, it could be an opportunity if you really want to go with Unity. And that's the thing, right? Even if there is a recovery here, do you want to take a position in this company? Do you have the patience to actually go through everything again and see if it works out? Because again, it is a duopoly. It's probably a great business if it is successful. But do we want to? Me personally, no. I wish them all the best. They're probably going to succeed. But do I want to become a shareholder? Probably not. Maybe it's PTSD, I don't know. But I've had enough. I will follow the company. Hopefully, if, let's say, a year from now, things are much, much better, then maybe. Yeah, maybe. But right now, even at all-time lows, maybe I can make some money because it's so low, because there is a restructuring, because new CEO, new CFO, etc., etc. Could very well be. I just think I won't have the patience with this one again. That's just my opinion. Of course, leave yours down in the comment section below. If you enjoy this type of videos, leave it a thumbs up, subscribe if you have not, and I'll see you all in the next one. Bye bye.